represent that. I'm trying to do my best to jinx the market, right? If I'm wearing a red shirt and expecting a market crash, maybe we'll see the markets move up. So I'm obviously doing everything I can on my end to make the markets green. What can you guys do? That's what you have to ask yourself. So we're going to start off taking a look at some of the charts, but we have a really interesting Biden story about inflation today. It's pretty quick, but it's a very interesting video that we're going to play for that. So we'll start off, once again, taking a look at the charts, making sure the stream has excellent connection and all that. It looks like everything is going pretty well. Good morning, everybody. Rocky Mountain Gobblers, Kitchener Leslie, Shadow Girl. It looks like we've got some of the regulars in the stream already. So the S&P yesterday actually did pretty darn good, right? All things considered, it was tanking the first half of the day. And look at that epic rebound that actually turned green on the day. So if you look back over the past couple of days, you can see that we were actually up over the course of the close from the day prior to the close of yesterday. We were up about 0.5% on the S&P, despite all that negativity, all this fear in the market. However, unfortunately, in the after hours and pre-market, we have given back a lot of those gains. Right now, the S&P is down about, I believe, 1.5% from where it closed. So yeah, 1.5% almost on the dot is what the S&P is down over the after hours and pre-market. We'll see what happens if we can reverse this market crash, if we can get another great rebound coming in. I mean, the chart, you can see massive green bar from the S&P, huge green wick. However, I will point out, let's see if we can pull up a 2-year chart and see what happened during the pandemic crash, right? When we initially had that, there were some green days, right? So it doesn't necessarily mean we're done. Hopefully we are, but we'll have to see with that, right? Just because you have one green day doesn't mean the market crash is completely over, although it might be, right? This is obviously, the stuff we're dealing with is far less severe than a potentially, at the time, what people thought was potentially a world-ending pandemic, right? So maybe we'll see an end to this bloodshed in the markets, and hopefully some of the small cap stocks will really recover. Now, good morning, everybody who just joined. It looks like we got a bunch of people in the comments. We got Manny C, Iguk, and Francis Maria G, Greg Taylor, Ryan Quaid. Good morning, everybody. Welcome. We've got hopefully a green day today. I'm doing my best to jinx this thing by wearing a red shirt, expecting a crash, but we'll see what we can do, right? We've got a lot of interesting stuff to talk about. And we're going to start off looking at what we have coming in later today. And it's actually consumer confidence, right? We're getting the consumer confidence numbers at 10 o'clock today. And we're going to see what people feel about the economy, right? I'm expecting, for January, I'm expecting this to come in pretty low, probably below the forecast. But we'll see. It comes in at 10. My thoughts are people have been pretty fearful in January, right? Pretty much all of January. If we look at the past 30 days, we've been moving down for a while, right? A lot of January, at least. We've either been trending down or pretty stagnant in the market since January started. We made our highs, all-time highs in the S&P on the 4th, and since then, it's been down and down and down. So my feeling is we'll probably get fairly low consumer confidence, and obviously, this has to do with not just the stock market, but overall economic activity, right? So we'll see what happens. I think that lately, a lot of people have been feeling not too confident in the overall economy. But we'll see what happens, right? Obviously, it doesn't matter that much what people are feeling at this point. What matters is the price action we see. So we'll see what happens with the consumer confidence. But that is coming out at 10. That's the first thing that I wanted to talk about. But we do have some updates on the Russia situation. So it looks like tensions are escalating a little bit. So yesterday, we talked about how NATO was sending over some ships, right? But apparently they're sending over fighter jets as well. And we have a little breakdown of what's happened lately. So basically, NATO's sending ships and fighter jets to Eastern Europe. The Kremlin, so Russia's capital, I believe that's Russia's capital, says the West, not Russia, is escalating tensions. The UK withdraws some of its staff. I believe the US did as well. And the U.S. mulls extra troops on NATO's eastern flank, sources say. So we're going to pull that up, actually. We've got the story right here. Around 8,500 American troops are on alert for potential deployment to Europe, the Pentagon says. So Joe Biden will speak with European leaders on Monday. I guess he already did that, and we actually probably have a clip from one of those meetings. Potentially that's where the clip is from. To discuss the ongoing tensions between Russia and Ukraine, including Russia's military buildup on Ukraine's border. So we're going to see what happens with those troops. Hopefully, they don't actually have to be deployed, but we'll see. It's looking like the stream is working well. Everything seems to be going good on both YouTube and Rumble's end. So nice. Anyways, we'll bring up that story because it's pretty interesting in just a minute. It's a pretty cool video, but we'll wait a little bit for a couple of extra people to get in the stream. I know during the first 5 to 10 minutes, we still got people joining in. So we've lost the chat. We have lost the chat. Let's see if we can refresh this thing again. There we go. The chat's back. Nice. So not only was the S&P falling yesterday, obviously we're down about 1.5% from where we closed. Well, first of all, for those of you who just joined, we actually ended the day green, and we can pull up the market map for that, right? We can see what was green. Of course, it just updated, and now it's all gray. But minutes ago, you could actually see the map for yesterday, and pretty much most of it was green, right? You saw a lot of these tech stocks were actually kind of gray. They were pretty stagnant, but you saw a big stream of green going through this middle section. So a lot of restaurants, auto manufacturers, internet retailers, entertainment companies, healthcare. We're actually getting some interesting news from the healthcare sector from I believe it's Pfizer. We're getting some news from, and we can take a peek at what that is, but it could be very good for their bottom line. And Rocky Mountain Gobbler says subscribe to the channel on Rumble. That's not a bad choice. Yeah, we've got the stream on Rumble if anyone wants to view it there. So absolutely, I love getting that Rumble viewership up. So here is the story for Pfizer, right? So Pfizer and biotech launched clinical trials of a vaccine targeting Omicron. So potentially, if this vaccine comes out soon enough, then they'll be able to start collecting some revenues and profits from it. And, if Omicron is still an issue at that point, I'm assuming it could be. It's pretty contagious. So they might be making quite a bit of money off of this if they get this done in time. So that could be very good for Pfizer stock price. In fact, we'll pull it up, PFE. It looks like they rebounded in a fairly significant way yesterday also. So they were crashing yesterday along with the whole market, right? And then towards the end of the day, they moved up about 3.5%, and they've been actually pretty stagnant in the after hours. They haven't moved down all that much like the overall market. So we'll see what happens with them. Obviously, they've been on a dip just like everything else, but over the past year, they've done pretty good with all the revenue they've been collecting. So we'll pull back up Sundial real quick. And man, Sundial has gotten quite cheap. But look at this big rebound we had in Sundial yesterday. I actually bought the dip. I bought in at 42 cents right here, I believe it was. And, bought 1,000 shares, so it added up to $420. So symbolic, I think, for Sundial to be buying up $420 as Sundial on the dip. We might have to get more today. If it dips again, I might have to buy up some more at 420. So we'll see what happens with it. We're also down on Sundial over the course of the pre-market. We're down about 2.5%, but we are notably higher than the lows, right? So we're not making new lows on Sundial. Good to see. We'll have to wait and see if we end up making new lows today. Hopefully not, though. Hopefully that 40-cent support that held for us right there was the low that we'll see on Sundial. Look at that big red wick on Sundial taking us down, a ton of volume, down to 40 cents, and people did not like it. They shot us right back up, and now we're potentially going to be on an uptrend, right? If the markets can recover, I think Sundial can recover too. So we'll have to keep a close eye on the overall market if we want to glean what might be going on with Sundial. Now, it looks like we've gotten a decent number of people in here, so we're going to pull up that really cool story. I mean, you don't hear this kind of stuff every day, but Biden calls a Fox News reporter, Peter Doocy, a stupid son of a word that I can't say on the channel. So I can't say it. Biden can say it. But we're going to play this video. But basically, the reason he did this was because I think it was on accident. I don't think he realized the microphone was live. But he said it after Doocy asked him a question if inflation was a political liability to him. So we're going to play this, and we'll see what Biden has to say about inflation, because this is somewhat telling, right? He doesn't seem to respect inflation that much, or doesn't seem to like it at the very least. So here we go.
Why are you sending 8,500 troops to Ukraine, possibly?
Thank you, guys.
Will you take questions on inflation then?
Let's move. Thank you. Thank you
Do
all.
you think inflation is a political liability?
That's a great asset. More inflation. What a stupid son of a bitch.
And then look at that. Look at this, how he says it, and then he kind of looks down at the microphone and realizes, hey, maybe this thing's on. I don't know. So it's interesting. That was just a quick little story that I wanted to pull up. Very interesting. So obviously Biden doesn't like inflation that much, but there you go. Just an amusing story, I thought. So I will point out that it's not just stocks that were on the rebound yesterday, and stocks, even though they are falling today, that hasn't translated into cryptos. If you actually take a peek at cryptos, which we're about to pull up, cryptos are doing pretty darn good over the past 24 hours. Cryptos are very green. Bitcoin's up 10%, Ethereum's up 12%, BNB up 10%, Dogecoin up 10%, Shiba Inu is even up 10%. Pretty much the whole crypto market has been green and green and green. It's very tough to find a coin that's red, like Unis said Leo. Never heard of that one, but it's down 3.5%, and it's the outlier, right? It's the only one that's not whatever those coins are called that are tethered to a dollar, the stable coins, right? It's not a stable coin. Those obviously fluctuate around, but it's the number 36 top crypto, and it's the only one that's actually down in the whole top 36. So all of the cryptos pretty much are doing very well. And Bitcoin, if you look at the chart, it looks like we had a nice bounce yesterday off of 33,000. So apparently people thought 33 was a very fair price. And, Crypto.com or CoinMarketCap.com has added in this live chat where you can chat, basically. They're trying to make this thing a little bit more of a social media thing about Bitcoin, right? Or Ethereum or whatever crypto you're looking at. And you can see what people are saying about it. It's basically kind of like stock twits. And this person here says, I don't believe it will reach 30K, but if it does, don't despair. I'll be buying it because the boom will come, and then it's just happiness. Now, I read that, and I wanted to talk about it for a second because this last part was a little worrying, right? And then it's just happiness. Potentially, what this person is saying is that, when your assets are going up, you're happy. When your assets are going down, not so much, right? You're sad. And that's a very typical thing to think, right? Typically, I think a lot of people fall for the trap of, they see their favorite asset, they see their portfolio moving down, and that ruins their day. And they're unhappy, they're irritable and whatnot because they're losing money. And it's a very natural instinct, right? Because nowadays, money essentially equates to food and shelter and whatnot because that's what you use to purchase all of those things. And, thousands of years ago, those things were very necessary for survival. Now we live in a world of plenty, and the money, although you can have more of those things, probably not. If you're investing in the stock market, you're probably not going to starve to death or freeze on the street if your investments go south, right? You probably have some other safety net, right? You probably have a house or you have some kind of income that you're using to support yourself, and you're probably not going to be starving to death. But a lot of people kind of conflate the two, right? They see their portfolio going down, and they just have that natural human instinct to be very irritable and upset because they see their chances of survival almost moving down, just evolutionarily, right? If you were unsuccessful on the hunt for the day and you just wasted your time and you couldn't find an animal, then you were probably not having a very good time, right? You were probably very irritable and upset. And people definitely do that when they see their stock market accounts moving down, right? When they see their equity moving down. And it's probably not the best way to think about it, right? Because we do live in a, well, at least probably most of us, if we're on this stream, if we're viewing the stream, we probably live in a first world country. And there's really not too big of a chance of us starving to death or anything too horrible happening to us as long as, the electricity stays on, right? So I wouldn't worry too much, when you see your stock market account moving down. I wouldn't let it ruin your day. That's something that I definitely used to do. And boy, is it much more pleasant to just forget about it, to just not let it get in the way. And obviously that's easier said than done, but it's something that I think we could all work on, right? Even me, even I still get a little bit disappointed and maybe a little bit less energetic when I see stocks moving down, but I really do my best not to let it get in the way of real life. And for some people, they can't do it, right? They have to, it just gets in the way no matter what they do. And maybe for them, it's best just not to look at the stock market on days that it's moving down in a big way, maybe, right? But obviously, that's up to you guys. You guys got to decide what's best for you. But good morning to everybody who's just joined us recently. Jeff, Silver we already had, I think, but good morning, Silver anyways. We got Pexi, NJ, good morning, man. Paul Rush, Jeff, I already said Jeff, Tyler Mike, good morning. Auto Codes, Boogeyman, and M. Good morning, everybody. Welcome. So we've got an exciting day probably. Once these markets open, there's no telling what's going to happen, right? I mean, we saw a great rebound yesterday, and if you look at the one-year chart on the S&P, looking at the daily, huge green wick, huge green bar. And a lot of people I saw in the comments, they were saying, oh, looks like it's done. Looks like the crash is done. We're going to start moving up again. And, I'm obviously hopeful that that's the case. But once again, I'll pull out the 2-year chart so you guys can see what happened during the pandemic crash, right? There were certainly some green days in that pandemic crash, right? Just because you saw green days doesn't mean it was quite over. And in fact, the last day of the crash was actually a red day, right? The lows that we made were actually on a red day. So it's not a guarantee that we're completely done with this. And if you look at the 1 year, it looks like we are slightly moving down. So it's something people need to prepare themselves mentally for, right? A lot of people probably saw this thing moving up. They probably bought back in to their favorite stocks or bought more of their favorite stocks or whatever. And they might need to prepare themselves mentally for the situation that we could be looking at where potentially stocks are moving down a little bit, right? We have a very important Fed meeting tomorrow. So we're going to pull that up, right? Not only do we have consumer confidence coming out later today at 10, which probably won't be that great, right? I'm expecting January to be fairly low, but we'll see what happens with that. We also have, on Wednesday, we have a Fed statement. We have a Fed statement, Fed interest rate decision, which they're probably not going to raise rates, right? My guess is they're going to keep them the same. They're not going to spook the market by raising rates way earlier than they've said they might. And we've also got a Fed press conference. So I believe Jerome Powell will be speaking at this, right? He is the head of the Fed. So we'll see what happens if, hopefully it's Jerome Powell at this meeting, but it doesn't really specify on this site. So we'll see what happens tomorrow. My guess is we'll probably see, if Jerome Powell or whoever's talking at the Fed is very dovish, we might see a little bit of a recovery, right? That's kind of their job, to keep this whole thing rolling, right? They want it to just perpetually be moving up. They never want to see the big crashes, right? They've done their best over the past couple of years to really just keep this thing moving up. I mean, they hate when there's a big recession like the dot-com bubble or the 2008 financial crisis. That is their worst nightmare, right? They do not want stocks to be moving down. They're essentially, they're working for the wealthy, and the wealthy own stocks, and the wealthy want stock valuations to keep going up so that they can get on this list that we're about to pull up. Wealthiest individuals. Let's pull this up. So we've got it right here. I think it's the Forbes list. That's the good one. Yeah. So the real-time billionaires. These people like it when stocks move up, right? They don't want stocks going down. So we've got Elon Musk in number one, and look at the hit that he's taken to his wealth, right? He used to be a 300 billion kind of guy, right? He used to have 300 billion something, I believe. Now he's down to 241 billion, and it is no surprise, right? Look at Tesla stock. Tesla stock is barely sitting around $900 when you look at the yearly chart. Man, he was a $300 billion man when it was at, $1,100, $1,200. Now it's sitting at 9, using that as support, actually, right? If you look at the past day, I looked at it when it was a bit lower, when it was around the 850s, 860s. But it looks like it rebounded with the whole market, got back up above $900, which is actually a historical resistance level for it. If you look, now we have to pull out the 2-year, happened so long ago, but $900, this top line that we've got right here is where it topped out during the initial massive rally that it had when it went from $70 to $900, more than 10xing. Then it moved down a little bit, and now it's starting to use 900 as support. So pretty cool stuff. Even though Tesla is at a fairly high valuation, right? It's, I believe, at these prices, it would be a $930 billion market cap stock, not quite $1 trillion anymore. And it does have a rather high PE ratio, which we'll pull up right now. I still think Tesla is a good long-term play, right? Even though it might be a little frothy pretty much all the time at these PE ratios. You look at the PE ratios of 303. I think they're rapidly growing. I think Elon Musk is a good leader for any company, right? Especially Tesla, right? If it's an industry that he understands, he's been working on it a very long time, and it's something he's really motivated to continue working on. I just happen to trust Elon Musk. I think he'll do what's right, and he does have most of his money. If we pull up that Forbes list, he has most of it in Tesla, and you can see that when Tesla goes down in value, Elon Musk's value crashes, right? He's down. I mean, he's lost about 60 billion. It looks like from the, at least from that whole from the whole Tesla moving down thing. Now, obviously, it was a pretty good move for him on his part to be selling Tesla stock when he did. And if you look at the year, I believe it was around here that he was selling a lot of his Tesla stock, right? He had to get it done before 2022 began because his whole thing was that he was promising to pay more taxes. He wanted to appease some of the politicians who were complaining that, these billionaires, they don't pay any taxes. So Elon Musk said, all right, well, I'll sell some of my stock and pay taxes on that if that's what you want. So he did it, and it did move the price down a little bit. But still, we've managed to hold at 900 that time as well as this most recent dip that we've had. Now, if the market keeps moving down, all bets are off, right? Maybe 900 won't be able to support Tesla. We do have an earnings call coming up pretty soon. It looks like on the 20th tomorrow. So tomorrow's aftermarket will be Tesla's earnings call. Maybe that'll save them, right? If they have a really great earnings call. But I'm not so sure because Elon Musk did tweet out a while ago that he was expecting a recession, right? So we'll try to pull up Elon Musk's Twitter and see if we can find that. So let's see. Here we go. Let's try to find his actual tweet if we can. Yeah, here we go. This should be it. So, Elon Musk. Here we go. So he tweeted out on December 30th, so not that long ago. He said, if history is any guide, not many will make it past the next recession. And then someone tweeted back at him, when do you think the next recession will be? And he actually responded to that, and he said, predicting macroeconomics is challenging to say the least. My gut feel is maybe around spring or summer 2022, but not later than 2023. So he's basically saying at some point in 2022, he's expecting a big recession, and maybe we're on the brink of that right now. Maybe he knows something we don't, right? Maybe he's looking at the analytics for Tesla, and he's looking and he's saying, oh man, orders have dropped, prices are going up, inflation's a real threat, recession inbound, right? Maybe that's what he's looking at. Who knows what he's actually looking at? If he actually knows what he's talking about, if he's even right. I mean, maybe we won't see a recession until after 2023. I sure hope not. But Elon Musk, at the very least, I thought it was worth mentioning that he is predicting one to happen at some point this year. So we'll see what happens with that. But once again, probably a wise decision on his part to be selling his stock right before a potential dip, before a potential recession. So he maybe has benefited from that quite a bit. Obviously, he had to pay probably close to 50% in taxes because it's just so much money that he made from that sale. But all in all, probably best that he has a little bit of cash, right, instead of just being pure Tesla and SpaceX. So we will pull up the StockTwits chart, and I wanted to point out an interesting trend. It's not that interesting, but it's somewhat cool, right? So you can see that during these times of market volatility, typically, not during these huge dips that we experience in the overall market. Typically, AMC will be dominating the leaderboards at StockTwits. But an interesting trend is that whenever we see a lot of market volatility, it's actually the SPY that dominates the StockTwits leaderboards. It seems to be the ETF that everyone flocks to and obviously tries to trade options on and talks about whenever there's a big market crash, because it is tracking the S&P 500. And you can see the exact same thing on Reddit and Wall Street Bets. Trending stocks on Reddit over the past 24 hours, the S&P is by far the most mentioned stock, right, with 1,669 mentions, way above GameStop's 791. So vastly outpacing GameStop. A ton more upvotes, almost double the upvotes, about 9,000 versus 5,000 for GameStop. So a ton of people talking about SPY. But something else that I wanted to point out is that a lot of people are starting to talk about this stock, this ETF, which I'm actually very interested in myself, right, that I do invest in. And that is TQQQ, ProShares Trust, ProShares Ultra Pro QQQ. So what this is basically, for those of you who don't know what QQQ is, QQQ, which we'll pull up right here over the SPY, is an ETF that tracks some of the larger tech stocks in the S&P 500. So obviously, it's a little bit more volatile typically than the S&P, right? Tech stocks tend to be a little bit more volatile than the overall market, right? They're a little bit more growth-oriented. They're not as value-oriented. But they are typically, over the long term, if you look at the long-term chart, fairly good investments, right? You tend to make quite a bit on QQQ if you just bought into it in the past, right? They've typically gone up a fair amount. You know, the dot-com bubble right here, they crashed quite a bit. But overall, they tend to do pretty good. Now, if you just put a T right in front of that, TQQQ, it actually turns into a 3 times leveraged ETF. So what that means is essentially they're playing the options contracts, using the options contracts to leverage this thing up. And you experience a lot more volatility than you normally would investing in just normal QQQ. And it's actually pretty beneficial because if we pull up the QQQ chart, we're going to calculate the gains from, 2010, right? We're just going to see what you would have made in QQQ if you bought in at 2010 and held until now. Whoops, that's QQQQ. All right, QQQ. If you bought in at 2010 and just held until now, even after the latest dip, right? We'll calculate both. So you buy in at the beginning of 2010, and from there to here, you're up 700%. And if you sold at the highs, you're up 800% on QQQ. Now, if you go to TQQQ, you buy in beginning of 2010, and you hold until here, right? If you buy in at the beginning of 2010 and you hold until here, you are up. And we have to move this over to the side a little bit. So maybe we'll do it from the beginning of 2011, even though... All right, let's try to get this right on the dot here. If you buy into TQQQ at the beginning of 2010, we'll give it a little... we'll be a little conservative on it. You're up 8,000%. And if you sold at the peak, you're up almost 14,000%. Maybe if you sell at the exact peak, you're up 14,000% on TQQQ because tech stocks have done incredibly well over the long term. And this is a 3x leveraged ETF, right? So obviously, the downside to this is when the market tanks, you are down big. So look at this. Over the past couple of weeks, we've obviously not been doing too good. Tech stocks haven't been doing too good. If you bought into QQQ at the highs and held until now, we're down 13%, right? So no one wants to be down 13%. But if you did the same thing with TQQQ, you bought in at the highs and you were holding until now, you're down 37%. So it's much more significant, the drops as well as the gains, right? So if tech stocks were ever to really crash in a massive way, you could very easily evaporate most of the gains that you've gotten in this thing over the course of many years. So it's not as reliable of a long-term investment, although there is the potential for, once again, absolutely massive gains, right? Up 14,000% from 2010 to 2022, even after this big dip that we've seen. Well, I think up 8,000% after this big dip, but once again, up 14,000 if you sold just a couple of weeks ago. So, obviously anyone who bought into this would probably have sold long ago when they were up, 1 or 2,000%. But if you were holding, then there is the potential, especially what I think is really good is buying this thing on the dips, because look at how far it falls during the COVID crash, or the pandemic crash. I shouldn't say the C word. Apparently, I don't think YouTube likes it very much. But during the pandemic crash, when we moved down, I mean, if you bought this thing at the bottom of that, not even 2 years ago, and you sold it at the peak that we were more recently at, just a couple weeks ago, you were up almost 1,000%. And it's easy. You buy into the ETF, it's a buy and hold. And obviously, if you held it until now, you're only up 500%, but not bad, right? Doing the same thing to QQQ, it's not going to be nearly as significant over the past 2 years, right? So 2 years, 1 day, we'll see what QQQ, I don't know why I keep typing in QQQ, but here you go. If you bought at the bottom of the 2 year dip that we were on, then you were up about 135%, and if you were holding until now, you're only up 100%. So seriously, massive gains can be made in TQQQ, and I think that's why a lot of people are starting to talk about this one on Ape Wisdom, right? On Reddit and Wall Street Bets. It's up 24 spots today because, once again, significant dip. People know that you can make big money in TQQQ. Obviously, not financial advice. It's a pretty risky one, right? We'll pull up the SPY for the opening bell. It's obviously pretty risky, right? You can lose a ton of money, especially if we continue to dip. I mean, your money can evaporate in a 3x leveraged ETF. So be wary of it, but also be aware of it. And it looks like the S&P might be having a green day today. We'll see. Obviously, it's too early to tell, but we'll pull up Sundial instead of Tesla. I mean, Tesla's an interesting one, but Sundial, I think a couple more people on the channel care about. So we ended up having a red bar to start the day off with. And looks like pretty much everything except AMC followed that trend. Everything got a red bar. But AMC is notably pretty green, and crazy stuff happened with AMC yesterday. I mean, it was down to almost $14. It was down to $14.23 with AMC. So, man, boy, AMC has been decimated over the past couple of weeks, as has everything. But boy, oh boy, has AMC gotten cheap. Sundial looks like it's trying to turn green. We're around 45 cents at the moment. Maybe we can come back, and it looks like we're above where we closed, or we're fighting to get above where we closed. Look at that. If we can get up above 45 cents or 46 cents, then we'll be green on the day. So I'm sure people will be happy to see it. A lot of people I know love Sundial. Look at that. We're break even for the day. The market's down 1.5%. Sundial is beating the market. It's beating the market, guys. DWAC it's a little bit lower than the market, but not by much. It looks like we're going to struggle with DWAC. We're going to try to get up above $70. We used $60 as a beautiful support for DWAC yesterday. Hopefully that will continue to be the case. And AMC, no support was too clear, right? It was basically just 14.23, just a random low. So we'll see what happens with it. But my hope is that we'll see some green on all of these, right? I'm hoping that, I've done my job to jinx the market, wearing this red shirt, expecting a crash. Hopefully we can see some green because of that. But there's no telling, right? You can never, you can never influence the market too much. Maybe as I'm saying this, the markets are reacting poorly. Look at that massive red bar on the S&P. Oh, we're very close to making new lows of the day, right? If we move down to $431.50 just about, then we're going to be making lows of the day on the S&P, all things considered. But it isn't having that bad of an effect on Sundial. I think people have realized Sundial's too cheap. Look at that. At these valuations, I mean, there's probably some froth in the market still. Obviously, a lot of stocks in the market. We're getting pretty frothy. If you look at the yearly chart or the 2-year chart, I mean, it's just been up and up. We were due for a little correction. That is not the case with Sundial. I mean, Sundial was getting crushed over the past year. And it's due for a correction to the upside, in my opinion. And Slim Daddy Bim says, Rob, which metaverse cryptos are you buying? ENJ and Sand are looking like good buys. I am not in metaverse cryptos. I'll pull up CoinMarketCap and show you guys. The cryptos that I'm in are Bitcoin, Ethereum, Dogecoin, and Shiba Inu. And not much Shiba Inu either. And SafeMoon. But I'm not in any of the metaverse cryptos, right? I've heard of those. I've seen some of what they have to offer, some of the gaming cryptos and whatnot. And it's a little too early for me to tell, right? I haven't spent that much time looking at them. I'm not too well versed, and not well versed enough to just randomly throw money in. Maybe I should, but they might be a little gimmicky. I mean, who's to say if those are the metaverses that are going to take off? So I've not gotten into the gaming cryptos yet, but I should probably look into them, right? I'd rather get into them early, earlier rather than later. Man, it looks like Sundial's doing pretty good. Look at this. We're up almost 2% on Sundial. So Francis asks, hey, Rob, what do you think of SoFi? I really like SoFi. Pull up SoFi. It looks like, obviously the markets have been giving everyone a tough time lately, but SoFi was pumping earlier on the news that they got their banking chartered. They can become an official bank now. So really cool stuff. I think that they've got a lot of good stuff going for them. If you look at their website, I'll pull it up. They're involved in so many areas. And they're really putting pressure, I think, on a lot of the retail banks, right? The big banks that have physical locations. So look at that. Right on their front page at SoFi, we've received approval to become a bank. and you can invest with them. You can get personal loans, student loan refinancing. Looks like they've got a credit card, or I believe maybe a debit card. Home loans, auto loan refinancing, credit score and budgeting, insurance, private student loans, and a credit card too. And you can do crypto with them. I think we have to go here. Then you can do crypto too. So they've got crypto also. So they just have their tentacles in so many different areas. And now that they're becoming an official bank, and the fact that they're purely online, I really like, right? When we'll pull up this story on CNBC. Well, maybe we'll just pull it up on Google, actually. And it's a very telling story. It tells you really that SoFi is moving in the right direction. U.S. banks close record number of retail branches in 2021. Wells Fargo shutters the most. So on net, U.S. banks closed 2,927 branches last year. And they're doing this because it's not cost effective to have all of these retail locations open. Most people are banking online for the most part. Very rarely do people need to go in and get cash or do anything with a banker that they can't do over the phone or online. And these banks basically have to deal with the cost of running these physical retail locations, right? They have to have the employees working the desk. They gotta pay the rent. They gotta pay the property taxes. They have to pay the insurance. They have to pay for the utilities, the electricity, the plumbing, whatever it is. And there are all these costs that just crop up with running these physical locations. And SoFi doesn't have to deal with any of it, right? I mean, they have obviously an office where some of their employees can come into work to manage the online aspects of their business, but they don't have to deal with, physical locations in every city, multiple probably in every city, so that people have access to their bank and whatnot. They just let people, use just transfer directly from their other bank accounts into SoFi. So that's a real benefit, I think, right? They're basically piggybacking off of all of these physical retail locations where people can go and put in cash at Wells Fargo and then transfer it to SoFi. And it's genius, right? They're using Wells Fargo's infrastructure and just having the people transfer the money into SoFi, or they can get a better deal probably on interest rates and whatnot because they don't have to deal with all the costs of these physical retail locations. So a lot of banks have been closing their physical retail locations there potentially due to pressures put on them by online banks like SoFi. So, SoFi obviously just recently became a bank, but there have been, I've noticed, a lot of online banks, and I actually use one. And I'll point it out to you guys. If anyone is interested, let me pull this up. If anyone wants, you can join me in this online bank. It's a very cool bank. Really cool stuff right here. So it is called Yotta Bank, and I am a massive fan of it. And if you guys want, we're going to start a pool for it very soon. But basically, it's a bank that gives you lottery tickets. So let me turn on private mode real quick. Demo mode, it's called, so that I can show you guys the app. But very cool. I'll pull up the main cam right here real quick, just so you guys can get a look at it, because it's by far my favorite banking app. It gives me something to look forward to pretty much every day. And essentially, let me turn on Do Not Disturb also, just so I don't get any messages. But basically, you have your balance, and that's just a random balance. That's the demo balance, and it gives you lottery tickets for every $25 that you've got. And you get these tickets. They roll these numbers every day at 9, and you can track all the numbers there. But it basically automatically does it for you, and you can get big prizes, right? You can actually get pretty significant prizes, but typically you get a bunch of the small prizes adding up, right? If you have a bunch of tickets, then you get a bunch of these small prizes, from getting the Powerball or 3 in a row. It's tougher to get these bigger prizes, which, if you get everything, then you get 10 million. If you get everything minus the Powerball, you get a free Tesla. You can get $10,000 if you get the Powerball and everything minus one ball. But it's pretty cool because it basically pays you out a fairly high interest rate just from the prizes. In addition, it pays out a normal interest rate too of something low, like 0.2%. But most of your interest actually comes from the tickets, and it's called Yotta Bank, Yotta. And I'll show you guys right here. If you want, you can join using my referral link, Rob Almazy, right there. Hopefully that's clear for you. If you join using my referral link, you get 100 free bonus tickets. And we are starting up a pool where you can pool your tickets and whatnot. If you guys are interested, I just thought that might be, might be cool since we're talking about banks. I really like Yotta. And seriously, probably my favorite bank. I check it pretty much every night. as I'm going to bed, just to see, what tickets became money makers. So other than that, guys, that's what we've got for the banks, right? The banks are obviously, if we pull up, I think we can pull up the S&P map pretty soon. It should be loading in. We'll see what the financial sector is doing, but it looks like potentially some of these smaller market cap, more beaten down stocks are coming back, where the S&P is not. So that's interesting. It looks like gold is pretty stagnant. The dollar isn't making too many moves, and the VIX is the market volatility index, and it looks like it can't quite decide if it wants to go up or down. We moved down just a touch, but we're on the way back up as the S&P continues to move down. So we'll see what happens with the market, right? It's yet to decide really where it wants to go. We've been pretty stagnant, right? We haven't really made significant change in one direction or the other. We've kind of just been bobbing around where we opened. So we'll see what happens with this market, but it's certainly looking good for some of these smaller market cap stocks, some of these riskier stocks that have really been pushed. And JL asks, do they have a debit card or Apple Pay? If you're talking about Yotta, then yes, they have a debit card. And what they do is, since it's a lottery kind of thing, the way it works, I think, is out of every 100 purchases for certain categories, instead of just giving you 1% cash back, you have a 1% chance on every purchase in certain categories to just get the thing for free. So it's kind of cool. And Rocky Mountain Gobbler says, Rob, can you look at EEENF? EEENF. Take a peek. So it looks like it's fallen. 88 energy, and it's down to 2.6 cents. It's fallen big today. So no news is probably like a micro stock, micro market cap. EEENF. It's an over-the-counter, obviously. And wow, $436 million market cap. Would not have expected it, but let's see. So it has no company profile on Yahoo Finance, but I'll try Googling them and see what we can find. And maybe there's something there for us. It's headquartered in Australia. But once again, no information about what they do. Let's just take a look at the chart and see what's been going on. So, okay, that's not bad. They haven't been on a perpetual decline over the past while. They've been fairly stagnant, just holding around 2 cents. A stock like this it could blow up. You never know. It could blow up. It could be good. But I don't know anything about them, so it's tough to say. They're really, it looks like they're small enough so that there's nothing on Yahoo Finance. Oh, here we go. Actually, if we scroll down to the description, 88 Energy Limited engages in the exploration of oil and gas properties in the United States. They hold a 59% working interest in the Icewine project, which covers an area approximately 231,000 acres on a slope in Alaska. The United all 100% working interest in the Yukon Gold lease, covering an area approximately 15,000 acres, and a 50% working interest in the Peregrine project, covering an area 195,000 acres. Okay, so oil, if we continue to see big inflation, right, there's a couple of ways this could go, right? If the market's moving down and the Fed decides they need to keep interest rates low, right? They can't afford to raise interest rates. The markets are too spooked by them. Maybe they raise them, but just a little bit, and we continue to see some inflation because of that. Then maybe we'll see oil prices moving up. That would certainly be good. Any oil company loves it when oil prices go up because their costs don't increase because oil prices go up. Maybe they increase a little bit because I'm sure they're using some gas to mine the oil and electricity and whatnot. But they love it because it's just pure profit, basically. It's just extra revenue right into their pocket if they can charge more for oil and gas because supply remains the same while demand goes up. So that could certainly be good for them. Obviously, if any of those projects that they're working on really pan out, could be really good. But I don't know enough about drilling for oil to say if any of those projects are, AAA projects, or if they're really going to produce a ton of oil or whatnot. I don't know enough about it, but that is an interesting one, right? Really cheap oil and gas stock, around 2 cents, and it has pumped up quite a bit before. So yeah, maybe not a bad buy. We'll see. But something I do want to pull up, a couple of things. I did buy a little bit more SDC yesterday, Smile Direct Club, and it looks like we had a great close yesterday. We just popped right up to 236. Now we're down to 208, but I'm still probably up on the buy from yesterday. I think it was pretty low, probably below $2. But Smile Direct Club is one that's just been beaten down so much, and obviously, pretty high short interest on it. I'm trying to get in a little bit ahead of time, right? Just slowly but surely, as I see it making these incredibly low lows of around $2. I mean, it's a company that people have heard of, right? It's not a no-name brand. It could come back in a big way. I think that a lot of these smaller market cap stocks, these potential growth stocks that people have been a little bit fearful of over the past year, they've just been getting pushed down and down and down. And around $2, Smile Direct Club just looked too cheap. Although it's tough to say what they're really worth without them having any profitability and whatnot. I decided to enter in around 2. I thought that was a decent floor for them. They did dip down yesterday to 176 before coming back in a big way. So we'll see what happens. I'm probably going to, if they keep going below 2, I'll probably keep buying in because I think this is another one. It's a little, not necessarily inevitable. Obviously, since they're not profitable, maybe they go bankrupt. But NJ asks, what was the cheap oil stock? I think it was EEENF. EEENF. Right there. But back to Smile Direct Club. I think that around $2, they're getting to be a pretty big buy, and it would be too easy for them to pump up to 4 or 6 really rapidly, right? If the markets really started recovering and if some love started getting shown to these small market cap stocks, I think this one could easily get up to $6, right? I mean, it would be hopeful to say maybe they could get up to their highs of 16, right? That would be pretty hopeful. I don't think it's too hopeful to think that they could get up to 6. So that's just my opinion on SDC. It's up a little bit today. And another one that I really like, MindMed, MNMD. Geez, it was down to 79 cents yesterday. I wish I had noticed that. I would have been buying it at 79 cents. That's crazy stuff. It's up to $1.09. It's up 17% today. But this is actually a very good sign that some of these smaller market cap, more beaten down stocks are coming back. It's been my suspicion that they would be the ones leading the charge at the end of this market downturn, right? That we might continue to see a little bit of a rotation out of some of the bigger, larger market cap stocks. And let's see if we can pull up the market map. Hasn't quite loaded yet. Yep, here we go. So look at this. The markets are overwhelmingly red. However, some of the small market cap stocks that you can't see on this map because they're too small market cap are pretty green. So here's what we're looking at. Microsoft, Apple, Google, Facebook, Amazon, Tesla, Nvidia, Adobe, Oracle, MasterCard, PayPal, JP Morgan. They're all red, red, red. Pretty much everything on this chart. There's only, 4 red stocks. It's Lockheed Martin Corporation, Verizon, IBM, technically Gartner, so maybe 5, American Express, and Brown & Brown Inc. And then what's this? Zion's Bancorp. So maybe like 7 stocks are green in this whole map, and everything else is red. So obviously the markets are still feeling some pain, right? We can tell not just by looking at the S&P. What the heck happened on this daily chart? Look at that. What the heck is this? I think that's a bit of a glitch. I think that's a glitch. There's no way that actually happened. Brought us down to 364. Yeah, no way. The volume was not that high on this bar. So we are going to have to correct this bar and just remove it because it's bothering the chart. You can't really tell what the chart's doing when you look at that bar. So we got rid of that. But look at that. MindMed up 21%. I really wish that I noticed when it was below $1 yesterday. I would have been buying up big, but I was not paying too much attention, right? I had some classes to go to yesterday, and I just wasn't looking at MindMed. But basically, this is a psychedelic therapy company, right? They do clinical trials for psilocybin and all that. And I think that they have a bright future. Kevin O'Leary likes him a lot. He is Mr. Wonderful from Shark Tank, for those of you who don't know who he is. But I'm a big fan of MindMed, right? I think that these companies, although, you can see some pain with them for sure, they're the kind of ones that you want to be in on sooner rather than later, or earlier rather than later, right? I think that you can see some good stuff coming from these companies in the future. And look at that. This could be the beginning of a big reversal for MindMed. Hopefully it will be, right? It's obviously just been tanking. Fortunately, though, my position has been selling puts, which are not down that much money because there was so much premium to collect on them, so they're actually still fairly green. I think my average cost, if I'm forced to buy it, will be $1.25. I'm pretty sure. So I would not be upset at all. And in fact, I need to take a peek and see if I could be maybe selling some more of those for potentially a decent premium. So let's see, MindMed, 250 puts. Yeah, they're selling for quite a bit. So if I collect $1.50 as premium on these, well, the bid and the ask are way too far away, right? The bid is $1 on these, and the ask is $2. So there's just there's too much volatility in the market right now to get a good deal on them. But oh well, we'll see what happens with MindMed. I'm hoping that it continues to do good stuff. Although I wouldn't mind it staying below 250, which is where I'd be buying it up. If those puts expire in the money, I would not mind grabbing some extra shares for cheap. So up 20% though. That's a good one for the day. It looks like BBIG is green as well. We saw some green with BBIG, another little pump up to 333, bounce off $3, or bounce past $3, I should say. And Sundial looks like we're still green on the day, but just barely, right? We've been moving down the past couple of bars as the market's been tanking. I mean, look at this. The market has been getting decimated. Looks like the dump is still on, right? People are still dumping their stocks, potentially buying up some of the smaller market cap, riskier ones. Which, guys, I absolutely love to see it, right? Obviously, it's not fun while it's happening, while you're seeing massive dumps in a lot of these small market cap stocks. But boy, oh boy, do they present good buying opportunities, because people, they run this pattern with them where they dump a ton for months and then they pump up huge, and dump a ton for months and then pump up huge. And sometimes the huge pumps, sometimes it just takes you from the lows that you get pushed to around 40 cents to $1. But still, I mean, a lot of these small market cap stocks have a lot of room to run. And especially Sundial, I really like, especially if we could get some more cannabis-related news going. Let's see. Oh, look at this. Massachusetts cannabis tax revenue now exceeds alcohol by millions. I mean, this is going to be tough for politicians to speak out against, right? They're going to have a really tough uphill battle trying not to legalize cannabis. Now that in Massachusetts they're collecting more revenue from cannabis sales than from alcohol sales, tax-wise, right? They're getting more taxes. I mean, and talk about taxes, we need the government to actually be collecting revenue, right? We have a massive national debt. We'll pull it up right here. We're almost at 30 trillion. We need to stop printing and borrowing. We need to actually have some revenues. Obviously, I don't want taxes going up, but it makes more sense, if it's a sales tax than an income tax, at least in my opinion. So 29 trillion, 876 billion, 541 million is the current national debt, and we really need some taxes or some kind of income for the government, because they are just spending like there's no tomorrow, like they never intend to pay this debt back. I mean, I don't know if they do. It really seems like the kind of situation where they don't intend to pay the debt back. I mean, if you just keep borrowing, obviously the politicians in office won't be responsible for paying the debt back, right? They don't have to worry about it. But boy, oh boy. Man, this bar on the S&P really messed up the charts, right? Now the charts, I have to get rid of the entire day because the S&P bar messed up on TD Ameritrade. Well, I won't do it yet. But Max Pierce, good morning, man. I hope you're having a good morning too. I certainly am. Despite this market dip, some of my favorite stocks are not too red, right? Sundial, it's only down 1%, beating the market, right? The market's down 2.5%. MindMed up 16%. So also Smile Direct Club, one I was buying on the cheap yesterday, up 2.5%. So there's definitely opportunities in the market, I think, to be making money, even to the upside, even when there's incredible red days. I think that we can still see some good stuff coming for some stocks, right? Obviously Sundial's taking a little bit of a dip right now. We'll see if it can turn green on the day. I think people want that. So we'll see what happens with it. Hopefully they do turn green. But Smile Direct Club, once again, guys, I don't know how many of you guys have been looking at it, but it did catch my eye months and months ago. I never got involved in it, but I would always be getting very spammy comments on the channel back in November and October and December. Not so much December, but more so October and November. And people would basically be saying something along the lines of, in the comments, it was always, the same couple of bots spamming this stuff, but they'd be saying AMC was the mother of all short squeezes. GME was the father of all short squeezes. And SDC, Smile Direct Club, will be the son of all short squeezes. And I always thought it was a little amusing. I don't know if that's going to be the case, but we'll see. And Randy the Ape says, can you cover NNDM? We'll pull up NNDM. Nano Dimension, yeah, this I remember this one. So NNDM, we'll pull it up on Yahoo just to get a little profile. But basically, what? They're a materials company. So let's pull this up here. All right, so Nano Dimension, together with its subsidiaries, and this is ticker symbol NNDM, provides additive electronics in Israel and internationally. Its flagship product is the proprietary Dragonfly Lights Out digital manufacturing system, a precision system that produces professional multi-layer circuit boards, radio frequency antennas, sensors, conductive geometrics, and molded connected devices for prototyping through custom additive manufacturing. So a bunch of mumbo jumbo that's tough to understand, but we can go to their website, and they probably have a bit of a better way of explaining it. So here we go. I almost don't like this website. It's kind of cruddy. Looks a little old and outdated. Let's see if we can find something better. I guess this is it. Nano Dimension. Yeah, I guess that's it. Maybe we can go here. No, we don't need this. We don't need Google searches. All right. We'll just go to that website and assume that that's their page right here, but looks kind of cruddy, if you ask me. This is kind of cool. So 3D printer systems for space applications. Okay, so you can 3D print stuff in space. Reshaping the electronics industry with this 3D printer, I guess. And seamless design to manufacture with flight software suite. Okay, cool stuff. So basically they sell these machines, I guess, and you can manufacture whatnot. I haven't looked too deeply into this company, but they can produce a bunch of electronics, probably a lot easier than having a factory. You can just turn on the machine and start pumping them out, I guess. You still probably need quite a few materials to throw into the machine, but that's pretty cool. All in all, an interesting potential company, right? If you know, especially if you're into science and whatnot, and you understand that kind of stuff, that's when I think it makes a lot of sense to invest in those companies. If you really understand what they're up to, then it can make a lot of sense, right? I think it always helps to understand what a company's up to, so you can have more conviction in a stock. And when you see it dipping, you can say, well, I don't care. I know what the company's all about. I know what they're up to. I know they're going to be doing good in the future if XYZ happens, and I know they're probably going to be doing bad in the future if XYZ happens, and you know when to buy in and sell out. So I think, this kind of flies right over my head, right? I don't know if those 3D printers are the future or whatnot, but it seems like a cool company. Obviously, a growth stock, right? It's been getting pushed down. It's been doing the opposite of growing for a long time. And if we pull out the 2-year chart, they had massive growth in 2020, and now they're down. If we look from their highs to their lows, they're down about, let's see, got to pull the chart down a little bit, but they're down about 81%. So it's not been a pretty past couple of months for them, past 10 months. But once again, they had, from their lows to their highs, 2,500% upside. So, with these stocks, you never know when they're going to explode. And they really can take off pretty significantly. And look at this. Before they took off last time, they were coming down off another massive dump. And I think we're seeing a very similar pattern, right? People are dumping their growth stocks, dumping them. Then you get into a very hyped up period where people are looking towards the future. And they're saying, well, what companies are going to make the biggest innovations in the future? And you get companies like Nano Dimension making this kind of stuff that people don't quite understand. And everyone buys into them. People trade the momentum, buy them up, and push them probably higher than they deserve to be at the time. revenue-wise and whatnot, right? From just a valuation perspective. But from a hope perspective, right? People are buying them up on hopium, and they're hoping that they continue to do very well in the future. And inevitably, sometimes, some companies come down, some stay up at these valuations long enough to just eventually get to that valuation fundamentally. But it is a little rare. But I think we're due for another bull cycle, right? We've been moving down for quite a long time, pushing these things down. And I think we could do with a little bit of buying in these stocks, right? Just following the patterns of old. So we'll see what happens. Hopefully we'll get some green in them pretty soon. DWAC pretty stagnant, honestly. It's down 0.07%. So basically just at break even from close of yesterday. And Mr. Style, CENN. Yeah, CENN. Boy, another case where it's just been getting beaten down. Obviously, the CENN chart on TD Ameritrade's Thinkorswim, it just has when we changed from the symbol NAKD to CENN, so we don't have any of the prior data, but you can see it's just been getting pushed down also. We had a decent day yesterday, right? A nice bounce off of 190. Now we're sitting around $2, potentially going to be using that as support. Hopefully we will, but I agree with what James Wood is saying. Buy while it's cheap, and it's very tough. It's very tough to be buying when it's cheap, because oftentimes when stocks are cheap, you're looking at a situation where you bought into that, you've been buying into these stocks, and we'll look at NNMD, because that's, or what was the Nano Dimension ticker symbol? Is NMND? Let me find this. I'm going to find this ticker symbol of NNDM. There it is. So oftentimes I think that we get into this cycle where, people are buying up these stocks. They're buying them up cheap, potentially, right? And, maybe they start with a couple $1,000 and they're buying these stocks up every paycheck. They put a little bit in and they're running up. And people are looking at their accounts thinking, man, I've made thousands. I've made tens of thousands on these stocks. I'm getting rich, right? And they're at $17. And then they dip, and the people are like, I've still made tens of thousands. They recover a little bit, they move back, and then continue to move down. The people are still feeling pretty good. And by the time that they're getting really cheap, they're getting pretty darn close to what the valuations were prior, right? They're getting pretty close, right? They're obviously not as low as they were prior at 51 cents. There's still, a 6x gain right there if you're buying near the bottom. But with Nano Dimension at $3 right now, people are looking at their accounts and they're like, man, I had 30x. Now I have only 6x, and they're feeling poor, right? They feel poor, even if they've got some cash on the side. They don't want to throw it into the market because they feel like the market, that's a scam. I just lost most of my gains over the past year. It's probably going to keep going down, and they're not feeling too good about it. So they end up not buying on massive tips. And obviously, based on your own risk tolerance and how much cash you want to have in an emergency fund or whatever, maybe you shouldn't be buying, right? Maybe you should have more cash on hand just in case you have some unexpected expenses or whatnot. But for people who are, who have money they can afford to lose and whatnot, and they're just throwing it into the market, they typically do it when stocks are on the up and up. And then when stocks are moving down, they're not buying because they're a little worried, right? They're kind of fearful that stocks are going to keep moving down. When really, if you look at this chart, it doesn't matter if you were buying NNDM. There was still a lot of money to be made. Whether you were buying on this downtrend when it was at $2 or 125 or 51 cents at the lows, because there was still a ton of money to be made. Even if you were buying in at $2 and it went down a little bit more, right? It could have gone down 75% from where you bought it to 51 cents. But then less than a year later, you were up from your initial investment 8x plus. So, there's potential in these growth stocks, I think, but obviously we'll have to wait until they actually start these big uptrends, right? And just because you have a big pop up doesn't mean that it's just going to be up and up instantly, right? You saw a big pop up around here, and then we declined for a couple more months before really going on a long run up. So, you got to be careful with them. Obviously, no one should be using any money they can't afford to lose. But I'm seeing in the comments that DWAC is popping off. And it looks like, we are getting some big volume on DWAC. And it doesn't look like there's any news that came out about it just yet. At least not that we're hearing. Sometimes you do just happen to see big volume run into a stock. People want this thing above $70, it looks like. It looks like we're going to play with the $70 level. Hopefully, we will get up there. That's the hope. We've done pretty good with DWAC, all things considered, over the past 90 days or so. Though we have experienced a little bit of pain from this market decline, it's not nearly as bad as it could have been. We were down. Sure, we were down 29% if you were buying at the absolute high. But if you're buying 30 days ago, right? If you're buying DWAC 30 days ago, then you're actually, even at the lows, you were still up. You were still up about 7.5% from 30 days ago to the lows. And now you're up 25% after this most recent little pump up that we've gotten above 70 cents or $70. So I got Sundial on my mind. I'm thinking about stocks valued in the pennies, but DWAC up 5.5% today. So good stuff. I'm happy. 71.17 is the price right now, and beating the market. I mean, both DWAC, Sundial are ahead of the market, right? Sundial is now red on the day, but AMC is actually losing out to the market. It's down 4.75%. The markets are down 2.75%. So we'll see. We'll see what happens with this the market right now. It looks like we've experienced continuation of this downtrend. So we'll see if 420 holds us, right? That held us last time. And looking at the 1 year, boy, oh boy, they really need to do something about this. So let me fix this thing. So I'll just put the low at... Can I update this? No. Well, so be it. Okay, actually we can do this. 426, I think it was. Apply. Nice. There we go. Okay. And now it's back. Or did I not correct it? Okay. No, it really wants to be there. So, all right, that's fine. So be it. But yeah, DWAC flipped green, says Slim Daddy Bim. Yeah, it certainly did. Look at that, up 6.5% now, continuing to climb. So impressive stuff, despite an overall very red market. I mean, the S&P just continues moving down. Look at that. It's just getting crushed. And if you look at the S&P map, there's not much green. And there's a little bit more green in here. There's a little bit more green, right? Moderna's pretty green. Pfizer's pretty green. But overall, I feel like it just got a whole lot redder just now. Overall, it's pretty red, right? The tech stocks are pretty red. Tesla even is red. It's down. Still holding that $900 support. So we'll see. We'll see what happens with it. But pretty much the whole market. I mean, 1, 2, 3, 4, 5 stocks on this S&P map are green out of probably 100 or more. So somewhat scary to see, if you're investing in the overall market. But if you're investing in DWAC, it looks like you've got nothing to be afraid of because we are up 8%. Look at that. Just keeps climbing on bigger and bigger volume. More and more people buying into DWAC, it looks like. Let's see if that's getting any attention on the messaging platforms. So StockTwits, let's see what we got. No, it's not. It's not on StockTwits. It's not on the most active or on the top trending. That's interesting. I wonder if we looked at Google Trends, if a bunch of people are starting to look into DWAC. Let's see what we got over the past couple of days. If we've got a ton of people coming into it. Yeah, it looks like we're starting to see some people start to talk about it. We're not getting up to records or anything. Obviously, the markets are down. A lot of people aren't looking at the markets. They're not paying too much attention. And we're only up 7%, right? That's not crazy for DWAC. We've been up in the double digit percentage points before. So, 10, 20%. We could certainly, get a bit more attention coming into DWAC, but we'll see what happens with it. Zach Taylor says people are waking up. And Nilsson says the rotation is happening to small caps and micro cap stocks. Yeah, I think that's a really good observation. Some of them, right? We're seeing that with some of them, right? SDC at least is a little green. MindMed is pretty green, whereas the overall markets are not so much. However, I will point out, look at SPY. It's down 2.5%. And IWM, which typically has more of the smaller market cap stuff, is down more. It's down 3.5% almost. So it's not necessarily an overall overwhelming trend, but we're starting to see it with some companies. And if it continues, then that could be really good. And boy, this chart, man, they really need to fix this chart for SPY because that ruins the chart, right? I mean, I might just have to get rid of this bar for today. I mean, it'll be a pity. We'll miss out on some of the big movements of the day, but we'll see what happens. We'll see what happens. We're getting close to the end of the stream, but we're not quite there yet. We're not quite there. So the VIX, it looks like as the market moves down, the VIX just keeps going up. Now, it's something that I wish I'd done a couple of weeks ago when I noticed the market first starting to fall. But something you can do is you can buy into some of the options on the VIX, right? If you can't buy the VIX because for whatever reason, right? You can't buy it, obviously. But you can buy options on it, right? So you could potentially buy call options on the VIX. If you think the market's going to get a whole lot crazier, then you could be buying up call options, essentially, basically betting that volatility is going to rise. And if you look at the yearly chart, it might not be the best bet to make, right? Because volatility is already fairly high. It's basically the highest we've seen in a year. At least that's where we just got to. And if you look at the past 2 years, yeah, it was a lot higher during the pandemic crash, but that almost seemed like a once in a lifetime event where people were very worried about this mysterious disease that was going to come in and supposedly get everybody. But lately you have seen slightly rising crashes, right? You can see that we've been getting more and more volatile for the past while. We've been making higher highs volatility-wise for a while. So maybe on the next downturn, right, on the next downturn in the VIX, the next upturn in the SPY, when you start to notice it go down, might not be the worst idea to get some call options on the VIX. Now, obviously, maybe this trend is done. Maybe this is going to be the big one that moves us down in a big way. And then we'll be on another uptrend for a couple of months. And that's a very real possibility. In fact, I would hope that would be the case, right? I would be happy to see stocks move down significantly further if that meant that we would then be on a big uptrend for the next couple of months, right? That I would be very willing to hand that over, right? Let them take out some losses now so that I can buy back in cheap. I'm happy to lose on some positions in the short term to win on more positions in the long term, right? So, and Roman Con2 says, my trading view chart shows the low of the day on SPY at 364.68 with a huge wick on the bottom. So does mine. Look at this thing. I mean, maybe it actually happened. Maybe, during that minute or whatever, there were just no buyers in this thing. There's just nobody wanted to buy the SPY, and market makers didn't quite catch it, right? Maybe they didn't quite catch it, and it actually moved down this low. But who knows? Who knows? So, someone's asking about options. What some option picks you might not suggest, but be interested in? I never suggest anything, but I did want to look at some of the Sundial options because they're potentially they're not that cheap. They're really not that cheap. I mean, if you could buy the options for like 3 or 4 cents, then maybe I'd be tempted to buy up some of these options. But man, I mean, you're paying a quarter of Sundial's price. So you're really only getting about 4x leverage on this stuff. And it just doesn't seem worth it, to hold the options when you could just be holding the stock instead if the options are a quarter of the stock's price. I don't know. So I'm probably not going to be buying any Sundial options, right? Just because at the $1 strike price, you got to pay 11 or 12 cents per share. And Sundial shares are currently trading at 45 cents. So it doesn't quite make sense from my perspective to be buying up the shares, right? Or to be buying up the options contracts. I think that the shares make a lot more sense when you're paying that big of a percentage of the stock's price. Then I'd rather just be buying up the stock and eliminate the risk of the option moving down in value just over time if the stock remains stagnant for longer than I would expect. So I'm not gonna deal with that. But also, we do have to check consumer confidence numbers, right? Those came out at 10. So let's see what we've got. Wow, not what I would have expected. So consumer confidence came in. We were forecast to have 111, and we actually had 113. So it looks like people are pretty darn confident in January, right? They're beating out. It's nothing compared to what we were pre-pandemic. We've always been a bit lower than the records before, right? Of around 130, 135, 120. But 113, not that bad, right? All things considered, we're still, it looks like, on the uppy up. So hopefully we continue moving upwards with consumer confidence. Hopefully this is the end of the crash. But the S&P, it looks like around 10 when those numbers came out, we started moving back up. They probably didn't have the biggest impact, honestly, but they might have been a little aid, right? Maybe people saw, hey, there's some confidence in the economy. And look at this, AMC starting to move up. MindMed, I don't know how we got this back here, but DWAC is what we want. Up 7.5% on the day, near the highs of day. So maybe DWAC is going to get that run up. We'll see if we can test the highs that we've seen previously. Hopefully we can. Now SPY, that's all we need. We need that to go up too, and then we're golden, right? If everything starts moving up. It was funny. The other day I was watching, I don't know if any of you guys watch Meet Kevin, another finance guy, a lot more subscribers than me, but basically what he did was, I think it was yesterday, not yesterday, I think it was Friday, he sold all his stocks, basically sold everything, and decided to just hope that the market keeps moving down. And so yesterday, he was chipper as the market was crashing in the morning and whatnot. He knows that a lot of it's very interesting. He towards the end of the day, he knows that not everyone sold all their stocks. So he was basically pretending, rather obviously, to be really happy about the market moving up, all the while kind of suggesting to people that they short it and try to push it down. So he was obviously not happy when the market was moving up because he'd sold all his stocks. He wanted everything to crash to zero. He wants everything at $1. He wants to be able to buy it back up with all the money that he has sitting just in cash. He wants the markets moving down. But it was interesting. He was doing an end of the day live stream, and he was acting almost too blatantly happy about it. Right? He was pretending to be happy. It was a little obvious, I thought, but because you could kind of tell with the tone of his voice, he was a little worried seeing the markets move up and potentially leave him behind. Right? The last thing he wants is for the markets to be above where he sold his stocks and to be on the rise potentially, and him to have to decide, do I buy back in, or do I wait for another drop and potentially lose out on more gains if it just keeps moving up? That's the last thing he wants. So I'm sure he's very happy to see the markets moving back down today. But once again, he's missing out on some of the smaller market cap stocks. I don't know how many of those he was in, but something like MindMed that's up 16%. I don't know if he was in MindMed. I know he did actually talk with Kevin O'Leary about it. And Rocky Mountain Gobbler says he still had stocks in other accounts. Yeah, I think he broke it down. He said that out of his whole portfolio, right, he has about 20 million. He had 1 million in stock, 100,000 or 200,000, I think, in short positions, and the rest was cash. So he was pretty heavily in cash, probably really hoping for this exactly what we saw today, right? This continuation of the downtrend, which I kind of expected, right? Obviously, we see these rebounds from time to time as people buy up the dip, but we did downtrend in the after hours, the pre-market, and we're still lower today. So we'll see. Maybe we get another great rebound. Maybe that's the bottom, right? Maybe we make a lower low. Or a higher low, I should say. Maybe we bottom out around 427 instead of 420, and we just continue going up, right? And then we'll see. Maybe Meet Kevin's buying back today. Max Pierce says, Rob, you said you did puts on DWAC, but why did you say you didn't ever buy into DWAC long term? So the reason was the puts were just too good of a deal, and any money that I was going to put into DWAC, I'd rather put into the puts, and here's why. So at the $50 level, right? I was doing this when $50 was pretty much around where DWAC was moving, and I was selling those puts for $35 a pop. So essentially, I was giving $15 of cash collateral to whatever, whoever's buying the put for me, right? Or just to my brokerage. My brokerage is holding $15 of cash collateral, and I get paid a $35 premium to just hold on to, right? And if DWAC, the situation in which I lose on DWAC is it ends the year, right? It ends the year, January 20th comes of 2023, and it ends the year below $15. And I just thought, no way that's going to happen, right? There's no way DWAC is moving down to $15. I mean, maybe something crazy happens and it does, but if it moves down to 15, I don't even lose, I break even on this options trade, right? So I could either buy in at 50 and hope it goes up, or if it stays stagnant, make no money, or if it goes down, lose money, or I could sell these put contracts and make money all the way down, right? Even if it moves down to $20, I'm still making money. In fact, if it moves down to $20, I'm making 33%, right? If it moves down to 15, I'm break even. If it moves down below that, then I've lost some money, right? If it stays at $50, I double my money. More than double it, actually, right? I more than double my money if it just stays at $50 and anything. And basically, to do that, I'd have to hope it goes from 50 to 100. And obviously, we've gotten pretty darn close, right? We've gotten pretty darn close on DWAC. I'll pull it up right here. We have gotten pretty darn close, but it's not a guarantee, right? Nothing's guaranteed in the stock market. I'd rather take that very high probability of success trade and very high profit, right? Doubling the money as long as DWAC is over $50. So I'm very happy to be in that trade. And whatever money I was going to put into DWAC, I'd rather just do the options on it. And obviously, right, those options give me the potential to get into DWAC over the long term. If DWAC moves down below $50 and it's just below 50 on January 20th of 2023, which it probably won't be. It looks like we're on the uptrend right now. But if it's below $50, then I'll basically be sent shares of DWAC, right? But I'll only have paid $15 for those shares. So I'm happy with the options position, right? It just made too much sense from a risk reward perspective to get into the options, from my opinion, right? I like options. Not everyone is a big fan of options. Some people don't want to deal with hoping that it's above a certain price by a certain time of the year, and they just rather buy the shares. Obviously, some people have very high hopes for this and think that it could go to $500, $600 per share, and it could, right? But I'm happy. I'm happy doubling my money. I don't need to 10x it every time. I already about 4x'd it from my buy, or maybe I 2x'd it. I think I about 2x'd it already on DWAC when I bought in on the first day, and then sold out around $50 and transferred the money into those short put positions. So that's what I'm doing with DWAC. That's why I was in the options instead of just long on the stock. And potentially, if we saw a big dip after that, if we did see a big dip, right, if it moved down from below $50 and we ended up moving down on DWAC, that's when I would have potentially been buying up the stock, right? Because the options would have made less sense at that point. The premium, although it would have still been a large percentage of the profit that I could have made, the stock would have been cheap enough so that the collateral I'm putting away would have been equivalent to maybe the stock price, right, if it dipped significantly enough. So there was a potential situation in which I would have taken the long position, but the options just made a lot of sense at the price. So that's why I was in those. And Paul says, DWAC to 1,000, I officially sold my AMC. Yeah, I mean, DWAC, it has been performing better than AMC lately, right? Even today, it's up 5%. AMC is down 1.5%. So, yeah, I mean, that's understandable. If you believe in both, you got to make a decision. If there's a limited amount of capital, you have to decide where to put in one of those two stocks. If those are your two favorites, then you can make the choice. And it looks like DWAC probably has more potential catalysts coming up for it. I will say there's probably more catalysts coming up for DWAC in the near term than for AMC. But we'll see what happens with AMC. Obviously, it's been on a bit of a downtrend for quite a while now, so it's not things are not looking pretty for AMC. We have been crashing pretty significantly, actually. So from the highs to the lows, what we've done on AMC is we're down about 78%. Wow. And on DWAC, although, we have seen a similar thing, right? DWAC did get up to 175. So from the highs to the lows on DWAC, we're down about 59%. But very few people were buying at that high. In fact, it was in the middle of halts that we saw this high, and only for a brief minute did we actually see it at 175. So most people were probably in this thing sub $100. So, people haven't lost nearly as much money on DWAC as some people have lost on AMC, because you can take a look at the chart, and there's a lot of volume on this day when we're around $72. There's still significant volume when we're in the high 50s and even the low 60s. And, a ton of volume, obviously, just throughout the past couple of months, and it's just been moving down and down, unfortunately, and I've been caught in it. But fortunately, I've sold call options using the AMC shares as collateral, so I'm not down nearly as much as I would have been if I hadn't sold those call options, which have decreased in value, so I can buy them back for cheap if I wish. But we'll see what happens. I'm probably just going to wait for them to expire and keep rotating the options, right? Just keep selling more as AMC does what it does. So we'll see what happens with it. But I'm happy with my current position in it, right? It seems like a pretty volatile stock. If you look at the implied volatility, it's pretty high on AMC. Obviously, market makers know that there is a big retail interest in it, and that at any point it could pump up in a fairly significant way. So I have not been shy about selling those call options that have rather high premiums for a stock that's priced as it is, and until recently was fairly stable, right? But we'll see what happens with AMC. It looks like Sundial is finding some support at 45 cents. People don't want it to go much lower, it looks like, and it's finding this support as the markets are coming back. So the markets are actually starting to rebound a little bit. And it looks like Meet Kevin might be getting a little bit worried, seeing this market turn a little green. So we'll see what happens. But we're sitting at 431 right now. Potentially, we did use 430 as a little bit of a resistance. Maybe we'll start to use it as support in the future. That would be nice. Over the past couple of days, it looks like, the freaking chart. Looks like we used 420 as support yesterday, and now we're potentially using 430 as support. So that's good to see that we are making higher lows on this whole crash situation, right? Hopefully, we don't get too much lower on the S&P. And boy, oh boy, do they need to fix this chart, because that is horrific. So we're getting close. We're getting close to the end of the stream, and just in case anyone missed it at the beginning of the stream, I am going to pull this up, this little video, rather entertaining video that we had at the beginning, and it basically tells you what Biden thinks about reporters who ask about inflation. So Biden called Fox News reporter Peter Doocy a stupid son of a word we can't say on the stream on a live microphone Monday, after Doocy asked Biden if inflation was a political liability to him. So Biden does not like it when he's asked about inflation. So we're going to pull this up, play this real quick before the end of the stream. And here you guys go.
Why are you sending 8,500 troops to Ukraine, possibly?
Thank you, guys.
Will you take questions on inflation then?
Let's move. Thank you. Thank you
Do you
all.
think inflation is a political liability?
That's a great asset. More inflation. What a stupid son of a bitch.
And look at that. And then he kind of looks down at the microphone, notices, hey, is this thing on? He looks at it very suspiciously, and he's not too happy to notice, oh, there is a microphone in front of me. So that's what we've got for the stream today, guys. Hopefully you all enjoyed it. Hopefully no one's down too big on their portfolios today, right? It looks like the markets really are rebounding today again. So hopefully we'll see them become green by the end of the day. And we're already experiencing a lot of green in DWAC. Maybe Sundial will follow suit. AMC looks like it's on the rise. It's only down 1% on the day. So all in all, things seem to be going pretty well, all things considered in the current economic environment. So make sure to join the stream for tomorrow, because we have the Fed speaking tomorrow. So it's going to be a crazy day in the markets, right? A lot of tension built up around tomorrow. So we'll see what happens then. Other than that, guys, have a great day. See you in the next one. Bye.